James Bilodeau, co-author of the World Economic Forum's Financial Development Report 2009 with economist Nouriel Roubini. Let's get to the heart of the matter. The UK has knocked the US off the top spot of the index. What accounts for this?
Well, it's important to place this finding in context. Both the US and the UK, their overall scores have dropped significantly compared to last year. So in terms of their overall rank, they're still relatively strong, but the margin that they had over the other countries in the index is diminished. Particularly in areas such as financial stability, the UK and the US come in 37th and 38th out of 55 countries. We still see signs of strength in areas of financial intermediation, so the size and activity around their banks, non-banking financial services, which includes M&A activity and insurance, and then their financial markets, which extends across equity markets, bond markets, foreign exchange derivatives. It's important to note that some effects of the financial crisis aren't fully reflected in the data. We have a little bit of lag in some areas. That'll be borne out in successive iterations of the report.
So what does the index measure and how?
The index focuses on those measures that are relevant to the long-term development of financial systems. So it's important to note that it's not a referendum on the current financial crisis, but rather those areas that are important from a long-term perspective to the role of financial markets, financial systems, and how they support economic growth. So we look at foundational areas, things related to the institutional environment, things like corporate governance, legal and regulatory environment. We look at the business environment, so things related to taxation, human capital, cost of doing business, things related to certainly financial stability as mentioned. So we look across currency crisis, risk of sovereign debt crisis, banking system stability, and then we look at financial intermediation. So banks, their size and activity across different areas, non-banking financial services, insurance, IPOs, M&A as mentioned, and then financial markets. And then finally financial access, which we feel is an important measure, looking at the degree to which both companies and individuals are able to access capital and financial services.
You mentioned that the lead of major global financial centers has diminished. How do developing economies perform?
It's a good question. So as we look at the financial stability pillar that we capture in the report, many developing countries actually do quite well. So countries such as Brazil, Chile, Malaysia, Mexico score relatively highly in the rankings.
And finally, are there any other interesting findings with relation to developing countries?
Yes, as mentioned, we capture measures of access. And if we look at commercial access measures, we call them, so the abilities of larger firms to access capital, things like initial public offerings or private credit or venture capital, developing countries actually do relatively well compared to developed countries. And this may be because of the ability of larger firms to tap global financial markets. Where we see an area for improvement is in retail financial access. So specifically, individuals and small businesses being able to open bank accounts, access microfinance credit, or access banking services through branches or points of sale in their countries. So we feel this is an interesting and important finding for developing countries, and maybe an area that should be a focus for policy as these countries try to increase access for these very important agents in their economies.